Everyone teaches the orb like it's just break the range and go, but if you ever traded it live, you know it's not that simple. Today I'm showing you how to trade the orb the right way with Confluence, timing, and tools that actually give you an edge. The orb stands for the opening range breakout, and it's defined by the first 15-minute or 30-minute candle of the New York session. Most traders use the 15-minute opening range breakout, so to find this, we're going to come to the 15-minute time frame, which we have right here. The New York session open, so here's our 9:30 candle. We're going to plot our orb high and our orb low. So now that we have our orb high and low marked out, we're able to come down to a 5-minute time frame to look for our entries. Now when we're doing our analysis on a 15-minute time frame, because we're looking at our 15-minute orb, we don't want to go much lower than a 5-minute time frame, or else we could see a lot of fake outs. And what I'm going to show you right here is going to be the 1-minute time frame. We have our opening range break high, opening range break low, and what we see is we get a breakout of the high and we immediately fail. That's because on our breakout, we did not have a strong amount of volume. Now when we come to our 5-minute time frame, this would be a trade that doesn't even occur to us because we failed to close above our range. But once we start trading back towards the bottom of our range, what we notice is, look at this, buyers are failing to break us lower. Therefore, so far, we've only had a breakout higher. So this could be a potential trade setup if we're looking for a single break today. And what could help us find if we should look for a single break or a double break would be looking at previous day's price action. Have we been in a bull trend where we've been getting single breaks to the upside? Have we been range bound where we've been getting double breaks, and we should expect that type of continuation? And what we can use is a tool called edgeful, and that gives us an idea of the streaks and the probability of these setups occurring. So we'll let this trade play out, and as we see, we were able to hold to the upside for quite some time, but when in doubt, zoom out, we see that we are still currently within a range on the ES, so we let the market play out some more, and we see that with the lack of volume to the upside, we're able to fail back within that range, thus giving us another possible short setup to target the orb low if we're looking for a double break to the downside, which again ends up hitting because what we're doing now is we're trading the range. As day traders, we have to remember when we do our higher time frame analysis, like a daily time frame to get the general direction, when we're day trading, we're trading on a much lower scale, a 15-minute, a 5-minute, so it's okay to take scalps and it's okay to be patient for our trades. This is edgeful. This is the one-of-a-kind statistic-based platform that I mentioned before that is a super big help to traders that trade the ORB trading strategy, the gap fill trading strategy, the initial balance by levels. There are an endless amount of reports you can use. For today's example, I'm going to show you how I like to use the ORB report on edgeful. We'll go to report. Here we see the ORB 15-minute. Like I mentioned before, guys, you could change the size. You could make it a 15-minute candle, a 5-minute candle, a 30-minute candle. Just make sure that whichever time frame you choose, you're continuously sticking with it. You're not strategy hopping, or you're not going to get consistent results. So as we see here, we have a 55% chance, that's a standard 55% chance of a double break on ES of that 15-minute orb. What's great is I could come over here to sub-reports, and I could go by weekday, and I could see, okay, on Wednesdays, we have a 64% chance of a double break. And it also gives me the last 5 Wednesdays in a streak to say, okay, 4 out of the past 5 Wednesdays have been double breaks, but one of them was a breakout. That one breakout and all of these double breaks could have sort of helped me to say, okay, we're holding this low. We already had a breakout. I want to see if we could hold this low with our orb as our stop loss because we're looking for a breakout to target that orb high and new high of day. But also, the orb having major breakdowns or double breaks, we see that a majority, about 6 of the last 7 trading days have had double breaks, then I know that, okay, once we break higher, if we can trade back within the range, which requires us to be patient for this to happen, then it looks like the odds are much higher that we have a double break, which would set us up for that second trade. Now, I want to show you an example of an opening range breakout that gave us a breakdown and continuation. So for this trade, what we'll see is we have our first 15-minute candle, and what's different with this one that we saw on that previous example is this is a strong candle to the downside. Volume increased because the New York session opened, but there was a strong upper wick, which shows us trapped buyers, and a strong body to the downside, which shows us sellers are in control. So once we let a few 5-minute candles or one 15-minute candle continue, we see that we had our breakdown. Now at this point, what we can look for if we're expecting a breakdown and continuation is we can always look for a previous day low as a target. So here we have our previous day low. We'll mark that out as our PDL, previous day low, and we can look to see if price wants to hold below our orb and continue lower. Now again, because we're on a 15-minute time frame, from here we could come down to a 5-minute and see how price is reacting. Same thing, guys, we have our orb high, our orb low, and we have our VWAP. So now here's our extra confluence. VWAP along with the orb is a great trading strategy, guys. We see that we keep trying to trade into it, but we keep failing. So using that orb price level as our entry point and keeping our stop loss somewhere near a recent pivot high or even halfway through our opening range breakout, because we do want to not be too easy with our stop loss, where our stop loss is too high up where we're risking too much, but we also don't want to be too unrealistic where our stop loss is too tight. We get stopped out, trade goes in our position, we try to chase it, we get stopped out again. It's not worth it. So we want to be realistic with the market. If our analysis is wrong on this trade and we do break back higher, then I want to stop out about midway, because I would expect us to continue to that ORB double break. But because I'm looking for us to continue lower, I could look for this ORB break down and target that previous day low and see how that wants to play out. Alright everyone, I hope this video helped. Make sure next time you use the orb, use some confluence, watch your volume, watch the VWAP, previous day high, previous day low, and keep an eye on the right time frame analysis. Hit that like and subscribe button, and don't forget to use tools like Bookmap for order flow or edgeful for a statistic base so we can get an idea of what are the odds and if they're in our favor.